All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. Today, we're going to talk about continuation patterns and remounts, especially in the FANG stocks, the big tech stocks. It's been the go-to play for what seems like forever now, as whenever these stocks start to look like they're breaking down, they resume their trends. And we're going to talk about how to trade this. We're currently in this Netflix trade. I haven't taken profits yet, but this is a great example of the setup. You can see Netflix popping today to start the year, first day of the trading year, and we're off to a nice start here. But let's look at the chart back here. And what you're going to notice is, first of all, a big uptrend. I mean, going back to 2016, Netflix was around 88. We're up to 200. It's up over 100%. Now, throughout this, it hasn't been a straight line. There have been some big dips, some dips that made it look like the stock was breaking down, which make it tough to hold through this. But if you're a swing trader, every time the stock started to fail, you look for that potential continuation pattern. And we see that here. You got the trend move up, you get the pullback, and then you wait for a remount. Now there's two spots. One, in a really strong trend, you play the remount of the 9, and that has worked well throughout the cycle of this stock. We've taken it a few times. You can see here, I still have a couple of my entries, one right here, that was a nice trade, and a couple right here, and one right here that were good trades. Now, the other way, which hasn't happened quite as often, but when it does, it's much more powerful, is when we get a deeper pullback breaking the 50, and that's when people really get scared. They might give up a little more. But then when it remounts, it's really ready to run. So you look for that remount of the 50-day moving average when it breaks down. Now, I don't generally enter below that level in case it's a real breakdown. So we're going to wait for a remount of the moving average here. You know, it didn't technically break, but it bounced off the 50 here. We did get a break in April, and then it remounted, and that was your entry. Huge gain. Now, with this one, I actually entered on the break of the 9, not the 50. But same concept here, and you could have entered on the break of the 50 a little higher, and then you got the big pop. Again, here in September, it's worked every time. And then here in October, not quite as big of a breach, but we got the same thing. And now we had a little bit of a scarier pullback in December as we broke the 50, started to break down, and through this range, we were talking about this, that we're going to be patient, we're not going to jump in, but if we get a break of the 50-day moving average, or a remount, sorry, of the 50-day moving average, we would jump in. And we got that here last week, the big breakout here, and then the hold on this day. Our entry was at 193 something, and you can see we're right about at 200. I've set an initial target at the top of the range, so we're looking at 203, which would be about 10 points. Now, I do think Netflix is going to go on a tear in 2018. The action looks good. These trend continuations continue to run. So I think it's in play for 2018 as well. But what I'm going to do here for my swing, I am in a long-term position as well, but specifically for swing, which is what we talk about here, rather than holding through a breakout, I will get out at 203. And then if it does actually break the high at 204, I'll get back in. So one big trade broken in half, just in case the big trade doesn't work. So that would equal a 10 to 11 point gain, considering we were only risking 4 points. That's nice, about 2.5 to 1. And then again, if it breaks 204, then we'd play for the high breakout. So live trade, Netflix, trend continuation, pullback, and then remount setup, one of my favorite setups when a stock is in a trend. And then we could also play a high breakout if we do hit our target, which is about 3-4 points away. All right, guys. Well, I've got the weekly swing report coming, and then we'll have another trade review probably later in the week.